All right, good morning, everybody. It's Monday, 7:29 in the morning, New York time, London lunch. Monday, the 23rd of February, 2015. This is your daily Forex strategy session. My name is Wayne McDonald. I'm a humble currency trader, having traded the foreign exchange market for over 10 years now. I'm also the Chief FX Market Strategist for Traders Way. They're hosting today's webinar for you. They're investing into your successful future. We're here to provide information, training, advice, guidance, so that you can find your way to be successful in trading Forex for many years to come, and you'll choose Traders Way as your broker. Today is a Monday, so we will plan out our trading week. Things I have planned for you: review the Commitment of Traders report to show us the large positions in the market by institutional investors such as hedge funds. We will also review the calendar and look at the event risks and opportunities in the marketplace for this week. Maybe, just maybe, we'll have time to do some technical analysis on some of the currency pairs. How does that sound? Remember, trading with leverage is risky, not appropriate for everyone. Your past performance, good or bad, never predicts your future results. So always stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Okay, so let's start with Commitment of Traders report. Okay, and then we'll do the news calendar. Good. All right, so this is the Euro USD, and we're looking for a couple of things. We're going to look for trend, and then we're going to look at change of trend. Now, as you probably know, these are large positions in the market. They're large enough that they're required to be reported to the government. Hang on, I messed up my charts. There they are. Okay. Yeah, they're large enough. Imagine that. They're large enough that they're required to be reported to the Commodities Futures Trading Commission in the United States of America. Okay, so they're important. This Monday was released at the close of trading on Friday. Well, today's Monday, so it's pretty relevant, pretty new. And these, it was reported Friday, but these positions were as of close of trading on Tuesday of last week. Okay, so it's still quite fresh. These are large institutional positions. Great. So what we're looking at is the number of short positions, the number of long positions, and you add them together and you get the net. Okay? Now, we're really looking way down in here, aren't we? What does this tell us over the last 3 weeks? Market is still net short, extremely net short, but relative to the positioning over the last couple of weeks, a little less net short. Still dramatically net short, but just a little bit less. We haven't been adding to the short positions. In fact, something else might be happening, right? Now, the red line here is price in dollars. So you can even see over that course of these 3 or 4 weeks, look what happened to price. Price has moved sideways as some of the market's been getting out of their short positions, right? You say, well, Wayne, how do you know people aren't going long euro? Look at this, guys. These are the long positions. Does that look like the market participants are adding to long positions? Does it look like those that want to buy the euro have bought more euro? Yes or no? No. So this is very useful information, isn't it? What is it telling us? It's telling us that some of the short positions are coming out of the market, but nobody's long. Profit taking. Yeah. Yeah, Izzy's got it. Profit taking. So does that mean it's the end of the trend? Should we all be preparing to go long Euro USD? No. So what have we been talking about the last couple of weeks as price has been moving sideways on Euro USD? What have I been doing? First of all, I say, not interested. We can find something else to trade, right? Remember how quick I've been on that Euro USD over the last couple of weeks? I look at it, I'm like, we can find something else to do. And the other part of it is if you are going to trade it, trade in the direction of your bias, which should be short, and then therefore sell at resistance. We've been range bound, so you would identify resistance and trade with an oscillator as your entry, because that's what oscillators are for. You're supposed to use them in a range-bound market. Forget about Fibonacci, that kind of thing, right? That's what the message has been over the last week or so. We're range-bound. Don't use a trend trading strategy anymore. Identify resistance. Use oscillators. Sell at the top, ideally because that's your bias where you want to be short Euro USD. And then, but have minimal expectations because we have not yet continued the downtrend, but we might somewhere in the future, right? And why would there be a little more potential for Euro USD dropping in the future than Euro USD rising in the future? Because nobody's going long, and currently we're only moving sideways because some of the shorts are getting out, and not even dramatically, right? So to me, it says commission, sell at resistance, and maybe it'll drop. We don't know until it does, but we can put two and two together, right? So I am still fundamentally bearish on the Euro USD currency pair. Nice. Next, okay, pound dollar. Wow, huh? Does this have real potential? Well, first of all, you can see price has gone up, as indicated by the red line. Price has gone up. But also look at the net. The net gone up. Again, the net is the short positions added to the long positions, right? There are more people short pound in terms of dollars, right? But at least there's, over the last month or so, significantly less people short, net-wise, right? So what's going on? Is it bears getting out? Is it bulls getting in? And the answer is yes, it's both. Okay, so more significant on the bears getting out. Okay, so there's definitely less bears, and there's a little more bulls. But could be the birth of a new trend, right? It looks like a completely different story than Euro versus USD. Okay, is it dramatic yet as far as bulls getting in? No. But we did squeeze a lot of the bears out of the market, right? Makes me think that pound might be very interesting if we can get this to move upper. And maybe pound, but not versus USD. Pound, Euro pound, pound Aussie, etc., right? Pound Swissy. Okay? Could be interesting, right? So you want to keep an eye on that. Keep an eye on that, right? There's an eye. Boop, 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 boop. Okay, so keep an eye on that line, especially next week. We'll see. Yen. Who likes trading yen? I do. All right. Anybody else? Just me? Yeah. All right. So let's take a look at what's going on here. Whoa. A lot less people short, huh? Dramatic decline in people short Japanese yen. Okay. I'm looking at the orange line, not the red line. Looking at this line. Significantly less people short Japanese yen. And a tiny tick up, but I'm not ready to be concerned about that. But certainly some interesting going on here, right? What is one possible explanation for this? Why did we talk about this likely happening back in November and December when Euro USD was way up like this at 122? Why did we already talk about that happening in the spring? Why did we already know there was a high probability of yen strength? Repatriation. Thank you, Krakos. Why is there repatriation? What causes the seasonality of Japanese yen strength here? Anybody? Krakos is right, but why? We need to understand. It's got to make common sense, right? If it doesn't make common sense, then some overeducated idiot is making something up so that his mummy is impressed with him. Profits abroad being back to Japan. Why? Dubista says yes, okay. Because of the fiscal year end in Japan being April 1st. The tax year, as Jim says, yeah. So we're getting closer and closer to year end, and you know, it's just normal business. And last year we had a tax hike, so there was lots of Japanese yen strength, right? And this year there was a threat at some point, but they're not raising taxes this year, so it's just normal. Them full of businesses. You know, if you want it on your books for 2014, you got to get it back. You got to get your yen back to Japan before April 1st, and you know, that kind of stuff. It's just banks need to do it, multinational corporations need to do it. Just imagine Toyota and Honda and such just moving money around. Just normal business stuff, right? So that's cool. That's cool. But I got my eye on a couple of things with technically, and this might change, at least on the short term. But anyways, this strength really shouldn't be too much of a shock. But I think the news to use here is there still isn't a dramatic increase in longs, right? Is anyone buying Japanese yen here? Not really. Just a lot of people have got tired of being short. Do you know what? It's very often traders that are on the clue train late. They get in late, and then what happens? They lose money on the pullbacks, right? Because they don't have any profit or very few, very little profit. So they're in so late that as the yen gets strong, they get whacked out for losses, right? But they were not buying USD yen down here; they were buying it here. Now they're getting washed out, and then so maybe there'll be an opportunity to get back in once the market has time to exhaust. I don't know. We'll come back to that. Swissy, yeah, we're kind of closer to the neutral zone again. Okay, there's been a lot of opportunity on the Swiss franc, but I don't believe it would be appropriate for amateur traders. Okay, let the big dogs take care of that, the ones that know what they're doing. Okay, what's going on here? Aussie dog. Price is way down. Net still quite short. Anyone buying Aussie dollar? Very moderately. How about short? Well, here's how I look at it. This is kind of what's been going on for those that are long over the last few months. I'm going to illustrate here with the red arrows. Okay, those are people buying Australian dollar. Okay, would you characterize that price action, if you will, as trending up, trending down, or trending sideways? Sideways. Okay, good. Over that same period, these other red arrows indicate those that are short Aussie dollar. Would you characterize that as the amount of short positions going up, the amount of short positions going down, or the amount of short positions going sideways? Okay, generally up, which means more and more people short Australian dollar. Okay. So how do you trade that? You could use this as part of your fundamental analysis, right? You borrowed money from your father-in-law to trade Forex, right? So you're like, hey, Dad, don't call me Dad. Yes, sir. Hey, sir, I'm trading your money, and I'm looking at the large positions from non-hedging speculators like hedge funds in the market, and I'm shorting the Aussie dollar because that's what they're doing, and therefore I'm looking for resistance, and I'm selling at resistance. Nice. And if you're wrong, you're in trouble. Yeah, you better have a plan, right? All right, this is Kiwi dollar. Shorts, slight increase. Longs, slight increase. Net result, little change. Right here. Little change. Price has gone up, but, market's still quite neutral. Cool. Okay. Yeah, that's funny, Joseph. Wait till all your kids are married, Joseph. Wow. You have you have like a college campus. Right? Wow. All right. Net change, almost none. Longs, almost no change. Shorts, almost no change. Price, almost no change. What? Yeah, that just reflects the up, down, up, down, up, down, right? Up, down, turn around, 50 pips of profit. Up, down, turn around, 50 pips a day. Right? That's what the USD CAD's been doing, right? Going with oil. Cool. So let's do some technical analysis, and then I'll come back to the calendar, all right? One of the things I wanted to show you, let's look at a couple of things. Let's start with Aussie dollar. Okay, and these are what I'm going to show you, sort of like longer term swing trades. Stuff like if we can get it to set up, you'd pick up, I don't know, 300 pips, something like that. Are you okay with swing trades? I just want to go over them briefly. One thing that I want to point out here, and I don't know if I have a chart simple enough. I got to find a simple chart. Be a simple kind of trader. Boy, not much. All right, well, it's a little better. This is what I want to show you. This is the daily chart. And one of the things I'm looking at with a lot of different pairs, and specifically right now I'm looking at US dollar pairs. So I'm looking at the oscillators on the daily charts. Because a lot of the markets with the US dollar involved have been moving generally sideways in price. Now, on a smaller time frame, this is a daily chart. You know, on an hourly chart, it's been range bound like this, right? Up, down, up, down, up, down. But on a daily chart, it's been a small pullback, but not reversals per se, right? So one might say, based on things like fundamental analysis of global macroeconomics, analysis of central banking policy, analysis of commitment of traders report, which shows large positions in the market, blah, 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 blah. You know, your analysis of flipping a coin. You've decided that maybe you still want to be long US dollar, even though it's been generally sideways for a while. But now that we have oscillators crossing over the 75% line, it tells me that we are closer, maybe, we don't know yet, but we're closer maybe to resuming a down cycle. Now, like on this particular oscillator, not yet. It could be, okay, it could be, but we could stay overbought, you know, for 6 months. I mean, probably not, but it could. Okay, but at least we're probably if the downtrend is going to continue down on pairs like Aussie dollar, Euro dollar, for example, and I would think so, right? I haven't seen anything yet to say the strategy's dead, the trend is dead, the fundamentals have reversed, right? I mean, honestly, right? I don't think that's occurred. So I would think, with all known information at the moment, right now, that the trend, probably will continue. Okay, and if that's the case, then we're probably closer to the time where it does continue. And if we are trend trading, what we want to do is find it overbought at resistance, and then potential move back down this way, right? And that what we're looking at now is that we might be peaking in this pullback, maybe. Because what does the oscillator tell you? Do you even know what the stochastics is telling you? Well, what it's looking at are candles, depending on your settings, how many candles, and candlestick ability to make higher highs. Okay, so when the oscillator is rising, kind of in this period, candles are making higher highs. But when you're in the middle period, the oscillator gets overbought and says, well, the candles are not making lower lows, but they're having trouble making higher highs. Maybe it's becoming exhausted. Aha! Gag Zeus! That could be a clue. And then, of course, if it starts dropping, what's happening? The oscillators are now making lower low. Okay? So it's like the table is set, the candles are lit, the violin music's going on in the background, but we haven't sat down for dinner yet, It's close. It's time to get serious, right? So I'm looking at this oscillator on several dollar pairs. I'm thinking, well, maybe this week is the time we get our sell. And according to the oscillators, if I can get this right, maybe I can be in this for a while. So the stage is set, but the most important thing, of course, is resistance. You can be overbought on, but unless you got resistance, there's no trade, right? So what could we possibly use for resistance on the daily chart? Well, how about the moving averages? This is the most important one on, right? When you're aggressive to sell at the 21. And guess what we just hit? The daily 21 EMA. And that yes is a dynamic level of resistance worth considering shorting. And if you can short this, let's say on an hourly chart, and you jam your stop and it makes a lower low, not only could you be in this for a couple of days, you might be able to be in this for a couple of weeks. Okay, good question. Mike wants to know my stochastic settings. I speed my Stokes up. So if you're scratching your head, you're like, that doesn't look anything like my Stokes. Okay, I do speed mine up. I use 835. Okay, let me show you. Hang on. Okay, K period equal 8, D period 3, slowing number 5. Okay? Oh, no problem, Mike. Anything for you, buddy. Okay, so anyways, it's just a heads up. But boy, if we're right here, we could be really right. And if we're wrong, don't worry about it. It's a small trade, right? Like it could do this. It could bounce off this and do this. Well, you know, we have tons of time to prepare for that, right? But there's a reasonable possibility this sells off daily 21. And if it does, this is going to roll over. And if that rolls over and the 21's in control, we're going to get a move like we had here. Okay, which started at 82-ish, you know, 82 and a half. Really, it started at 83. So it's, well, okay, 83. And where are we now? Yeah, the low 76. All right, so certainly 3, 4, maybe 500 pip move. Yeah, simple swing, right? Do you guys want me to do another one? Another swing like that? Or should I just go onto the calendar? It's too easy, right? No, calendar? Everybody says calendar. Calendar, calendar. Don't do another swing trade, Wayne. No. No swing trade. Everyone's voting against the swing trade. All right, good. All right, fine. Talk to me, Goose. What are you interested in? USD yen? How about something related to the one we just did? Kiwi. Yeah, we can do pig. I'll do pig after this. I'll do it quickly. Boom, 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 boom. Let's see. All these charts are going to be too complicated. Yeah, that one's too complicated, right? Dun, 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 dun. That ain't gonna work. Which one? Boy, I'm not getting the proper data. All right, well, you have to trust me. I got a lot of charts going on, and for some reason, I can't get this one going. Probably because of all these lines. But Okay, we're at potential resistance up here, and we got potential 618 here. And if you look at the daily chart, the oscillator is way up here. Okay. Now, my spidey sensors are telling me that it's probably not going to be a fast move up, just because of the Kiwi. Let's see if we can do pound. Let's see if that'll pull up better. Let's try it this way. All right. Okay. So several weeks ago, we identified this area as a potential sell. You guys know that, right? You have it already marked. You probably already shorted a couple of days. Easy peasy lemon squeezy. Okay. So now what? We're at resistance, fine. Let's take a look at the oscillator. Okay. Not only is it in the overbought area, but it's starting to down. Is it significant? Yeah, well, if we're at resistance, it is. One might say we are near resistance. Okay. Now, I think the British pound has potential for strength. So make sure this lines up with your fundamental analysis. Okay. How about USD CAD? Throw this down on a daily chart. Let's try this. Yeah. I know it's a little muddled. Find one that's not so muddled. They all have pivot. Maybe this one. There we go. Okay. Seems to me it's closer to oversold than overbought, right? So maybe if it wants to rise like this, you'd have an upward move. Are we at support? Yeah, actually we're at the 21 on the daily. Okay. Very interesting here. What do you guys think of that one? US dollar strength, Canadian dollar weakness. On our way to what, 30? Okay. Well, we're still at 126, so there might be, I don't know, certainly, you'd think if it made a higher high, you'd get 300 or 400 pips out of it, right? Out of a swing trade, I like to see 300 pips. So it seems pretty reasonable. You could be in this till the end of the week. You'll notice that you might be a couple of days late. The way to use the moving averages is that you buy at the 21. This is above the 21. You're bullish and aggressive. Okay? if price is above the 55, you're bullish but conservative. So right now, there's still tons of reason to be aggressively bullish on this USD pair, USD CAD pair. Okay, all these circles are potential buy opportunities. Now you might look at this one, and at that time, the 21 was way down here. Remember, it's a lagging indicator. So it came down, touched the 21, more oversold than over potential here. And you can see now we have a 5A cross up, right? So you got the market bullish indicated by a 21.55 cross. Okay, so we're on the 21, and we got a 5A cross. Action is pointing up in a rising market. So I think there's some potential there. Now euro, let's do euro. I just want to show some contrast. Euro dollar, one would think that it's ready to fall like a ton of, maybe it is. Trend-wise, fine. Now we've had this mark for quite some time. So there's some hope here, right? You think we can get it to do something like that? Fine, but let's look at the daily. Not ripper amazing there, right? Not overbought, no nothing. So it's a little mediocre, but look at things technically. Let's get rid of the trend line now. What is similar to our past analysis? What's in control here? $21. So I think what could happen here is we test the bottom of this range and break it, pull back, test the bottom of this next range, which is here, right? Then we maybe come back and test this area again. Okay. Depending on the time frame you're looking at. So it's like, do you think we'll break this low like a hot knife through butter? What do you guys think? I mean, obviously, I don't know. Do you think it'll just go right through like it's invisible? Right. So I think it'll be respected to some sort of degree, right? So we'll come down, we'll test it. But I would assume it's going to break. Let's put it this way. Greece doesn't get kicked out. Do you think the euro's going to gain a, there's going to be a huge rally in euro because Greece stayed in? Oh, the euro, it was doomed, but now it's saved by Greece. I mean, it's sucked with Greece. Right? So anyways, so I don't know, whatever. depends on Greece. I don't think it depends on Greece. So anyways, I think it'll do something like that, generally speaking. Okay? I think it will respect support. I think it'll bounce, and then people will sell it. Yeah. Merkel's probably going to get fired, don't you think? Germany was against bailing them out in the first place. Then they give all that money to Greece, and then now Greece wants to renegotiate. The man. The Germans are livid. All right. So, anyways, some interesting opportunities out there if you're awake, right? Okay. Let's go through the calendar this week. Drag queen speech. Draghi, sorry. All right, ECB. Okay, great. So consumer confidence. I don't really care about consumer confidence. Okay. Janet Yellen testimony. Yeah, supremely important. Government Pelosi speaks for the Bank of Canada. Supremely important. Chinese PMI manufacturing data. Supremely important. Woo-hoo-hoo! Wow, huh? So we got tomorrow is like unbelievable. ECB, Fed, Bank of Canada, all in the same day. Wow. Okay. And then you roll into Chinese data. So now, just, in the next, 36 hours, you got the euro, you got the US dollar, you got the CAD, and you got the Aussie. Woo-hoo-hoo. Hello, volatility. Okay, then Yellen speaks again. It's funny because it's the same testimony word for word, but just different Q&A. New home sales. It's funny. I don't really care. Because the trend is already in place. I don't expect a big move one way or the other, but trends are in place. So, these are important. Maybe you get like 20 pips, 25 pip scalps out of them. But when I say I don't really care, I mean as far as my fundamental bias for, in that case, the US dollar, okay, I don't think anything could happen where I say, whoa, maybe I should reverse. I need a lot more than a one-off. And, we have a steady trend going in home sales, fine. Okay. See, so we got Kiwi stuff and Aussie stuff the next day. So, that's Wednesday, right? So Wednesday we got a lot of Aussie Kiwi stuff. Boy, it's going to be great. So like Wednesday, just tons of Aussie. Aussie, oi, oi, oi. For some people, some of the Aussie will be Thursday, depending on where you live. For me, it's like, because I'm based in New York time, the day starts with Aussie, then some dollar. But see, sometimes when you get the testimony, the dollar freezes up, right? after, and then it moves. So you might have nothing. The day might start slow and end very well. So, anyways, I think the day is going to start and end with Aussie dollar, and then whatever Yellen says on her second day, maybe we'll get a nice dollar strength. Now, let me say one thing on this. The market has been very wrong when it comes to central banking policy out of the Fed over the last couple of years, and I've never understood why the market's so wrong. Like, they were wrong on things like the taper, and I thought that was clear, absolutely clear. Absolutely. I mean, I don't understand why the market doesn't understand. But they were wrong then, and then they've been very wrong as far as the Fed raising interest rates. There's been all these calls like, oh, end of 2014, February 2015, first quarter 2015, first half 2015. And they're calling for these like interest rates happening soon, but there's no logical reason for it. And I think what's going to happen is Yellen's going to come out and say, we haven't even considered raising interest rates this year. What are you guys talking about? So, I don't know. There might be a small chance of dollar weakness for a while people realize they're mispositioned. But nonetheless, dollar will be strong. Let's say this year, generally speaking, the dollar is going to be strong. Next year, generally speaking, the dollar is going to be strong. That's just my fundamental analysis that goes into my strategy for central banking policy. Okay, but I think there are lots of market participants that are just wrong. They think the Fed's going to raise interest rates soon. I don't see that happening. So, anyways, maybe somebody realizes they're a little bit too aggressive, and we get a little, a pause in the U.S. dollar. But nonetheless, I believe the trend is strong, and so like on things like Euro USD, I sell rallies at resistance. I'll do that today, I'll do that tomorrow, I'll do that next week, I'll do that next month, and I'll even do that next year. Until something fundamentally changes. Okay? Revision for UK GDP, very, very important. Core CPI out of Canada, extremely important. Now, do you think inflation's going up in Canada? No, it's going down. It's going to get the bricks. They're going to miss. It's going to be a bad number. CAD's going to get weak. Wow, what a shock. Okay? But you heard it now on Wednesday, that on Thursday, Canada is going to get a bad number. Canadian dollar is going to weaken. And it'll be a shock. Same thing in the United States. I think we're going to have very low inflationary data. Okay, but not to be concerned on the long run. Durable good orders. Okay, that could be interesting. That event, that data is quite volatile. You have a big number one month and a terrible number the next month. It used to be something like if the United States was in trouble, manufacturing was slow, the president of the United States would call Saudi Arabia and say, buy a bunch of 747s. Boeing would get these big orders, and durable good numbers would go up, and everybody was happy. Jobs would go up. Trade balance improved, and everybody was happy. Not no more. All right, so, and then what? Wrapping up the week. Japanese inflation data is important. Again, they're going to miss. It's going to be a bad number. Oops. Trade balance. Did you guys catch this last week? Japanese trade balance. %60 change month over month. Oil prices. So they're in a situation where Japan's trying to create inflation, and they're going to be slammed with a terrible CPI number. So it'll be interesting what happens there. Definitely a play Okay, this is going to be very important for yen pairs. German CPI, okay, fine. I mean, they have a negative CPI, so, I mean, what are they going to do? Rock us with an amazing number and it's only negative 0.5%? I mean, don't expect anything good out of there. Second release of GDP in the United States, okay. Chinese manufacturing data again. Is that a misprint? I guess not, just a different PMI. Oh, the other one's HSBC. All right, so the other PMI. So, boy, I would say trade a lot of commodities this week. I think Aussie and CAD are going to be huge. I think US dollar, I think it's going to start slow and end volatile. I think we're going to learn a lot about Janet Yellen, and I think a lot of people are going to be mispriced. And then I think a lot of people are, you know, put it this way, I think if the dollar gets weak for 2 or 3 days, a lot of people are then going to start buying it. So it's just some people are in at the wrong price. They'll get in at the better price. All right, they'll get out now and then get back in later. Okay, that's what a trend is all about. I think the euro's going to move this week. I think the pound's going to move this week. I think it's going to be a huge trading week, guys. And here's what I want to wrap up with. If you get it right, if you get on some of these pairs right, for example, like this one we talked about, or the Aussie, they're worth staying in potentially for a while. That means if you get the trade going, move your stop to break even, and let it run. You might be able to keep in it this week, and if these trends are confirmed, I don't know if they're going to be confirmed, or like, for example, Yellen comes out and spooks the market instead of the dollar getting strong, it gets per week for a while. That could happen. But some of these pairs, you might get it right. You're in the trend. You got your stop at break even. You have no risk, and you might be right for a week or 2 or 3. And some of these trades might be 50 pips, but some of these trades might be 500 pips. Okay. The only difference is when you decide to get out. You're going to manage it the same. You're going to enter it the same. You're going to sell at resistance. Okay. You're going to use your moving averages. You're going to use oscillators. You're going to use support resistance, okay? Just like you normally would on a different time frame. But you might say to yourself, well, I'm going to treat this like a long-term strategy, not just pick up 25 pips and be happy. Why don't you get your trade in, sell at resistance, for example. And then when you have the opportunity, move your stop closer, and then maybe get your stop to break even, and say, I'm going to risk like opportunity cost. Okay, and you say, let's say typically you pick up 25 or 50 pips, and there's a lot of people like that pick up 50 pips and they're tickled pink. It's an amazing amount of pips for them. Fine. If you're that person, maybe you try something different on these ones. Move your stop to break even and say to yourself, it's going to be the opportunity cost. You got 50 pips right now in your hand, right? You could cash out right now, take your 50 pips and run. But because we have a lot of oscillators that are on a daily chart now that are in the overbought scenario, and technically they seem to be kicking off key moving averages, maybe you just say, you're going to risk the opportunity cost of walking away with the 50 pip in your pocket and see if you can pick up more like 300 pips. And all you do is just let it run. Now, Sharon says, she agrees it's going to be a big week. Well, that could be good and that could be bad. This thing could stop and reverse and go against you very quickly. You could be up 50 pips, and it comes all the way back out, and in 20 minutes knock you out at break even. Well, as long as you're cognitive that that's what you're doing, okay, You see that you got your 50 pips profit, you could walk away right now, and maybe that's the better strategy. Okay? But if it doesn't, then there's, I think, a lot of potential. Now, let's contrast that. If we were on the daily chart and a lot of the moving averages were sideways, so like I think Euro USD was that way, right? Okay. Okay. This, based on oscillators and stuff, says the trade might be mediocre. Some of them are in the same situation but are way overbought. Okay? So we don't know. Like Euro USD, maybe it doesn't drop like a ton of bricks. Okay? Maybe that's not the one you take the opportunity cost on. I like it fundamentally and all that kind of stuff, but whatever. So if you look at things like the Aussie or the CAD, and just make the decision, and it's not a tactical change. That's what I'm trying to say. Tactically, you still enter the same, probably on a 15-minute chart. You need to be at resistance. If you think the USD CAD is going to go up to 130, right? You still need to buy at support. You still need to buy at support when it's oversold. You might, if it's going to break out, maybe you do use a Fibonacci this time, and you still enter. You still have the same risk reward ratio on your entry. Maybe you typically risk 50 pips. All right, so you have a 50 pip stop, and once it's up 30 or 40 pips, you move your stop to break even. Okay, and you say to yourself, all right, the strategy is to be in it longer term. Tactically, everything else was done and managed the same. And you say, well, I could take my 50 pips, but it's not going to really change your let's say, your month. If you take your 50 pip profit, it's not really going to change your month. And you say, wow, February was such a great month. I had that 50 pip trade. That should just be a normal spot trade. That's just business as usual. But you analyze your longer term charts, and you say to yourself, this trade might have more potential. That's all I'm asking you to analyze and make a decision on. And if you agree with me, maybe you say, I don't take the 50 pip profit. I move my stop to break even. I remove real risk. The only thing you risk is the opportunity to take the 50 pip profit that you already have. And you try to stay in it a little longer. Like I said, a little longer might be a couple of days. But it could be, I don't know, it could be a couple of weeks. Okay? And maybe you say to yourself, well, a 50 pip trade won't impact, dramatically your return for the month, but maybe a 2 or 3 or 4 or 500 pip trade will. And maybe the market has the conditions that are favorable for that type of strategy. Okay? Or the volatility, because there's so much news this week, the volatility just, it's down, the markets are down, then it's back up, and then it's back down. We're all over the place. It's a mess. But you still entered your trade properly. Your stop was at break even, and the volatility knocks you out, and all you lost was the opportunity cost. You lost nothing in real terms, but you had the opportunity for more, right? So the key, I think, as a professional trader is to analyze market conditions and make decisions on strategy. Tactic very rarely change. I mean, the only caveat to that would be you notice that the market was trending, but now the market seems to be range bound. So, again, it's not really a tactical difference. It's more of a strategy difference where you say, all right, now I'm going to use oscillators and I'm not going to use fibs. Okay, but analyze the market conditions. We have been moving sideways for a while on a few pairs. Is it time for the trend to continue? And if so, do you want to be a part of that? If so, what strategy will you employ based on market conditions now? Okay? Analyze market conditions, adjust your expectations accordingly, use the proper strategy for said market conditions. Sound good? Yeah. Would you like to do the session again tomorrow? Yeah. Yeah? Cool. I will make myself available. I'll be here. I'll be here for you. If you like these events, pay it back. Open up a livetradersway.com. I think what we'll do tomorrow is we might consider going through binary strategies for these events. Okay? Sometimes you call them risk events, sometimes they're opportunity events, but perhaps with all these news events, they're all very important. Could be a very important or appropriate time to use binary options because the volatility will not knock you out. So, for example, if you were trading the Janet Yellen testimony, or when Draghi speaks, or when Pelosi speaks, or when Chinese manufacturing data comes out, the volatility could spike, let's say, up 30 or 40 pips and then down 30 or 40 pips, right? Well, very often, if you're trading the spot Forex, it spikes up, hits your stop loss, you lose a bunch of money, and then it reverses and goes in the proper direction, and you were right, but you lost money anyways. With the binary option, that doesn't happen. So it could go up 30 or 40 pips, turn around, reverse 30 or 40 pips, and you can still be right. It doesn't matter. Okay? So you take out that volatility from the trade strategy, and sometimes that's better. And crazy week this week, that's probably what I'd consider doing. I'd have lots of very short-term scalps, so maybe a binary is good for that, plus some long-term swings. Okay? So peace on earth, may the pips be with you, may your profits be above average. Thank you to Traders Way for making this available for you guys. I think it's awesome. See you tomorrow.